So we met on LinkedIn maybe about a year ago. And what I've been doing in the startup or insurance tech startup space is very much focusing on providing very, very tailored, modern, simple and easy solutions for people that work in the gig economy. We started to focus on this initially. I mean, I think it's because of my background. I'm part Greek and I've been working in very small businesses since I was a very, very young adult or even a child. So I'm incredibly passionate about risk management, just like you, for small businesses. So I spent my career after studying business and law and specializing in insurance, actually, and insurance law, kind of working in and for global insurance companies that specialized in business insurance, always focused on SMEs, and then also spent some time working for what's called the Small Business Commissioner's Office around policy and regulatory reform, again, looking at risk management and how to assist businesses kind of manage risk around privacy issues, or even a little bit of regulatory reform and reducing red tape. I kind of found and wanted to try and assist and support those types of businesses from a big global insurance company and then also from within government. And I felt that, you know, you should be able to do that within those big, huge organizations with lots of resources, but found that it was a bit difficult at times. So that kind of really gave me the impetus to focus on building out my own startup. We really quickly focused on the gig economy because it's so fast growing within the US. I mean, the statistics are that in the next couple of years, or even almost now, actually, it should be half of their employment or workforce. So, you know, Australia is very similar to the US in that respect. And although, you know, you could say sole traders are gig economy workers per se, it's 1 to 2 million workers, depending on the statistic that you look at. There aren't really too many protections out there for them, and how to access it and get something that's really fit for purpose is a bit difficult. So that's what we were looking to solve.
Yeah, fantastic. And I think obviously your experience in the big wheel of insurance, you know, and the work that I do as well, I find that there really is a shortage in the market to be able to provide an insurance cover for a unique worker, an individual who works for themselves. And obviously then there is a whole heap of exclusions, and then people are thrown into private sickness and accidents insurance, which is very expensive. So there's so many issues that are there, but then the real issue is these uninsured individuals who are individuals who are people who are providers. So they lose their money, and sometimes they're sole providers, so their family suffers. They lose their livelihood in the sense of their wellness to be able to physically perform any work, and then effectively uninsured become a person who's relying on our public system, or if they're not Australian firstborns, you know, they're relying on the oh my gosh, what no system, because their insurances for travel insurance wouldn't even cover them because it's a workplace incident. So, you know, there's this wide chasm and gap, which even the regulators have trouble addressing.
That's right. So to touch on this as being, it's a very complex and multifaceted issue, and one that I found a lot of delight in investigating and understanding and learning more about over almost a year and a half, in which we were kind of incredibly focused on just the gig economy. We're now focused a little bit more broadly on SMEs specifically, because it doesn't take much for a sole trader or a gig economy worker to expand out and get one employee. So we want to be able to branch out to the entire kind of small business kind of workforce, including startups. But thinking about the complexity of risk management for these types of individuals, it is quite difficult. I would say, we spent a lot of time looking at OSHC and OSBC type policies, which are those travel type policies that you were mentioning. The cover there is, and then also I was spending quite a bit of time comparing different types of covers that were available for different types of workers. So for example, like it's very typical for a disability support worker to have insurance included in their arrangement. It's very typical for them to be employed, even though they might be considered, a gig worker, or they might have an ABN. Some of them might be paid through an ABN, majority of them actually might be treated as an employee. So they definitely have cover under workers' compensation. So that's like quite interesting to dig into different types of arrangements. Nannies, again, very, very interesting. I think there's a scheme in place for them that's been established. And then we spent quite a lot of time on food delivery riders specifically. We found that a lot of individuals, although some delivery platforms like Deliveroo, for example, and Uber Uber Eats did have what's called group insurance policies in place. Accessing them when you are, 75% of food delivery riders and many other types of gig economy workers they're immigrants, as you mentioned, and they come from another country. They may not know how to access that kind of insurance or make a claim. So what we wanted to do is provide something that was super accessible, very, very tailored and specific to that type of work. And also they would only have to pay for when they were doing the work as well. So that's kind of what we ended up building out and launching towards the end of last year. I would have to say, though, it was a mixed success because, we secured and hit out our first milestones. We had a partnership with the wonderful #1 Asian food delivery platform, Easy. But, the complexity of building a pay-as-you-go product in what is in Australia, like one of the most heavily regulated insurance regimes in the world, was very, very complicated from an administrative point of view. And it led us to kind of review the system completely in regards to actually issuing a pay-as-you-go product, particularly when we had so many partners involved in helping us manufacture that insurance product. Tell me if I'm being too complex. So, we spent a lot of time building out a pricing model that was unitary based, building out documentation, because this is to be treated as a retail type product. So these are consumers and possibly vulnerable customers as well under the new regimes that have been introduced and will be introduced. So we had to tread really carefully about ensuring that people understood what they were purchasing. We were trying to describe the insurance in really new, simple ways and using very, very plain English, which is quite different to some insurance products, particularly business insurance products, but then also blending the product in a way that it was still accessible and affordable. So the products we built to offer were a theft and accidental cover for bicycles and e-bikes, and which was, really quite popular. Public liability insurance up to 10 million, which again, necessary, but what we found from speaking to hundreds and almost 1,000 food delivery riders and some leaders within delivery platforms is a very low incidence rate. And then finally, personal accident insurance. So not a workers' compensation, but some kind of an equivalent, which would be cents in a dollar. So very, very affordable. Yeah.
Yeah. So talk to me about, the current status and what led you to make those decisions.
The current status, sorry, just to clarify, the current status of food delivery riders and their rights, or?
No, just in regards to the Upcover, because you mentioned it was very difficult to get it off the ground, and also, where you're sitting right now. And if you could just talk me through to that moment there.
Yeah, so I mean, what we built out was a pay-as-you-go product, which had a subscription rolling model, which is very, very new for the insurance regime in Australia. We had a lot of support about building it, but the complexity meant that every single customer or policyholder was renewing every month. So a very, very high kind of admin, and this is the unfortunate thing, right? So because we were using a number of partners, it's the maybe surprising or unsurprising thing about insurance even today. So there's a number of people involved in the value chain, and while you can build an automated and beautiful front end, a lot of people are very manual in the back end. So because we had a unitary based policy, which meant, a personal accident policy, for example, was issued at 7 cents per delivery. And that meant that everyone had a different price based on what their income was. And then the number of days that they worked, that also changed. So which meant reconciling was very, it was quite manually intensive for the couple of months that we were offering the product. So in the end, the options that we had available to us was to kind of focus on our milestones for this year, which as a tech startup is to kind of expand out our product lines and focus where we believe we can provide the greatest value. And unfortunately, that meant that we had to put a pause on the food delivery product and the pay-as-you-go nature of the product for now. I'm incredibly passionate about it and still talking to food delivery riders. We are finalising a submission to SIRA on a public consultation that's going on at the moment. We've spent quite a bit of time with a few executive directors there trying to assist them or kind of giving them a blow by blow of how we built out our own modelling and what information we had and sharing a lot of detail there. But fundamentally, yeah, I think it's a challenged environment, and particularly when there's no mandatory insurance requirements, it makes offering a very tailored product probably, it's not like you're going to saturate the market, if that makes sense.
Yeah.
So it became a little bit of a business decision for us, as well as digging into understanding how we can actually potentially build out a food delivery product in the future, but then also focus on the rest of the market too, because it's not just food delivery riders that we've been focused on. So what we're looking at now is more traditional insurance products, actually. So annual based insurance products. And we would be looking at monthly installment options, which provides something that's quite simple and easy for individuals to understand. They can still cancel at any time, and pro ratas are available. Yeah. But it does mean that there's an annual insurance policy. So it means that it's very traditional from the sense of the insurance manufacturing value chain.
Yes.
And what we do is we're focusing on completely changing the experience so that we can partner with the likes of, that food delivery provider that I mentioned called Easy, as well as many other providers, so that they can actually offer insurance to their workforce as a further kind of value and added benefit. That's kind of what we're focusing on at the moment.
Okay, great. So when you did your research for your business, did you ever come across the Black Car Fund?
Please tell me the Black Fast?
The Black Car Fund.
No.
No, it's very interesting because in New York, in the United States of America, there's a fine group called the Black Car Fund. It's a not-for-profit that was established a number of years ago, around 10 or 15 years ago. And they provide an insurance for black car workers who are considered the third way rather than a gig worker. That's their sort of fresh way of talking about a gig worker, the third way of working, where they're able to insure employees or, gig workers via their not-for-profit, where it's an additional number of cents per kilometre, not dissimilar to what you've been working towards. And it is taken only, of course, if it's a non-cash basis work. So if they're a primarily non-cash basis, they just add it on as an additional fee, like a 5% GST or 10% GST, or it's an additional charge per kilometre to insure the person who's driving you, which is not dissimilar to the gig worker, Upcover service that we were working towards. Now, I foresee that this is one of the most important insurance policies that in the future, we need to get made available in some way by hook or by crook. And I know that's what you're really working towards, Skye, because I think in Australia and around the world, there will be and there is more and more people approaching the third way of working as an individual for either a platform or an individual as themselves. And so Australia-wide and around the globe, there's many people who are working effectively uninsured. And by doing this, there's exposures not only to the person who's conducting the work, but there's exposures to people who are receiving the services of that particular work, whether it be a company who at the end of the day, regulators often have them pick up the bill if there was something terrible to occur. But we're taking on this middle bit, this grey section where there's some poor individuals, be them workers, be them the company who's having this liability imposed upon them, where the grey has to be sought out, where there has to be an argument. And if it is in a situation where someone has so sadly lost their lives, there's not a space for that kind of argument. There's a space for care. There's a space for providing services and love, and there's a space to provide treatment to the family and or the individual if it's not a loss of a life. Now, in some states, there has been a launch of some individual sole employee or sole worker insurances. So WorkCover Queensland offer, which I'm sure you might have seen, a really quite a good policy for an annualized policy. Then you can pay by the month for sole traders or individuals. Now, the trick with that is it's only available for Queensland workers. The trick with that is if you're a Queensland director and a Queensland working director or, you know, individual sole trader, you get this policy. The minute you work in New South Wales, you're not covered. And, you know, in other policies, if you're an employer and you take your worker to New South Wales for the weekend to complete some work, that work is covered, even if they have an accident in New South Wales because their state of connection is Queensland, the Queensland policy would pay. But under the, you know, director's policy or the self-insured individual policy in Queensland, that doesn't apply. Also, the policy is very high cost for a very low paid individual. So the minimum policy amount is $1,650 per year, which is $165, you know, $150 plus GST per month to pay. And that's quite a lot if you're not doing a lot of work in your additional you know, work in the gig economy. So, you know, during the pandemic, you know, there's been a lot of people who found that being a gig worker was the most secure kind of work for people around the globe because, you know, the food workers were needed more than anyone, the delivery drivers were needed more than anybody. And so, you know, we all know that this is a work that's not going to go away. We all know that this is a kind of work that those workers do need to be afforded the same opportunities to be insured. And I believe that the regulators need to stand up and absolutely partner with insurers like yourself and or need to provide those insurance policies as a matter of fact, because it's like they're ignoring a whole subsection of the working Australians, you know, because there is so many people who are always working as a non-traditional worker in this third way as a gig economy. And, you know, us as consumers, if I want to get an Uber, I'm paying less. And the reason I'm paying less is because those additional taxes, those additional requirements of insurance are not being provided in full to the workforce because they're limited policies for insurance and there's no lost, you know, wages and anything. You know, we as consumers should be expected to pay even a small amount additional to ensure that people are actually insured and that we're getting safe, you know, output for those particular individuals.
So you're touching on a really important point, and like one of the first issues I think with workers' compensation, workers' insurance generally is it's state by state. So even one solution isn't necessarily something that can apply in another. I know for a fact that Deliveroo for many years did buy workers' insurance policies nationwide for all of their delivery riders, but you know the Safe Work equivalents were making different decisions around whether or not these individuals were considered workers or employees. So they were getting claims denied in some instances, which led them to then purchase their own group insurance personal accident policy. So digging again into the complexity of the issue. So those platforms that purchase insurance on behalf of their riders and workers, a couple of policies might respond. And even in the cases of some licensed vehicles like scooters, for example, which seems to have the highest fatality rate or like even injury rate, CTP and insurance can also respond and provide up to 6 months of income income loss, as well as, protection for injuries of the actual rider if they're not at fault. So, I mean, there are very interesting ways to navigate how to access and get cover for an injured worker. So they can do it through the delivery platforms themselves. The insurance policies that exist with Uber and Deliveroo at the moment are I think they intentionally try and make them quite equivalent in relation to death payouts to a workers' insurance scheme around Australia. The unfortunate thing is that because they are personal accident policies, and this is the same as the policy that we offered, so we still had the same issue as well, is that it's proportionate depending on breaks and different types of injuries that would occur. You would only get paid a couple $1,000s or a few $100s if you broke a finger or a bone. It was all relative for the total insurable amount, which is a bit difficult and very different to workers' insurance. I know for a fact right now, and this is unfortunate because it's just a New South Wales specific solution that's being investigated, but CIRA, which is the State Insurance Regulatory Authority, is investigating, looking into a couple of different solutions. One of them is to require all of the delivery platforms to have a level of insurance, which right now isn't consistent, which I think may remedy the issue somewhat. I would kind of call out, though, that for those delivery platforms, it's their biggest overhead. Like, they spend billions of dollars on purchasing insurance. In the UK and in the US, there are mandatory insurance requirements for couriers and for, black car drivers in the US and limousines, etc. Everyone needs to purchase an insurance product. So there definitely needs to be a solution, and I believe it needs to be mandated. I don't know that it's a long-term solution for a delivery platform none of them are really making too much money right now. They're all running at a loss to continue with an overhead that may be increasing in time. The other interesting product that you mentioned, and you kind of touched on it, is around this embedded insurance, having a levy or something similar. The New South Wales government currently has the passenger service levy in their solution to CTP insurance and Uber drivers not having to pay, what a taxi might have to pay for CTP. They're investigating a similar solution for food delivery riders and adding this on as a surcharge to every single delivery that occurs. So I think that is something that I would believe is quite favorable. I think there are technology solutions. It could also be done manually, depending on, the provider, which might be iCare at the moment, and the platforms themselves. But it would just mean that there's a consistent support that's provided to every single person that does a food delivery, and it's a long-term solution as well.
Yeah, and I think obviously there's, I sense, we all have faced this same frustration of every single state and insurer doing it their own way. We have, in Australia, obviously, as you know, the risk-based states and then the state-based states, and for us, last week, all the WHS ministers met and they talked about the priorities for workplace health and safety for Australia. And they highlighted the gig economy as one of the key items. Now, for us, I think as our country really needs to consider, how will we unitedly consider the insurance challenge that is here? Each of our regulators really do need to get together from a state-based regulation for workplace health and safety, but also with their partners, the insurers, to be able to collectively provide some solutions. And whether it's a privatized solution or a government-based solution, as by your passion, Skye, we have people that are working to serve us, the customers, who are at a significant disadvantage because the insurance policies are not available to them.
Yeah.
And we're taking the benefit of either lower fares for a taxi, rather than a regulated taxi where insurance would be mandated, because we've got mostly employees going through some of these other regulated taxi services who hold a policy. We really need to look towards having our government support a solution. If gig economy is on the agenda, then they really need to get the regulators and the insurers together to create some policies that work, including ones that can be turned on and off, and allowing that flexibility, because you've provided an amazing solution, and surely enough funds and interest to get together have to occur.
Yeah, look, I completely agree with you. And I think it is a matter of time for there to be some kind of consistent solution, whether it's offered by the private market and something that Upcover delves into in the future again. And I think a pay-as-you-go product is something that, there is a lot to be said about delivering a compliant, simple and easy insurance product in the market. And we were very proud to have delivered that for food delivery riders. I think what we will be kind of looking into is more mandatory type products and providing them for sole traders, economy workers, all the way up to small to medium-sized businesses now. And then in the future, looking to really, really be able to actually provide people the most tailored insurance experience that they might need for whatever their income is and however that might change as they kind of progress as a business. I strongly believe risk management for a very small business owner shouldn't be a complex one. It shouldn't be something that is so complicated you don't even know what's covered and what isn't. But it is a bit of a minefield. I mean, there's a lot of people in this industry and there's a lot of inconsistency in how products are built out and even how they're priced. So, but I think there's a lot of opportunity in this space as well.
Cool. So thanks so much, Skye. So where do you see yourselves moving in the next 6 months? And then, what's your magical endpoint? Where's your unicorn going to go? And which one are you going to ride out of here on? What are you up to?
Yeah, so we have been working on rebuilding our entire technology platform. We've got an incredible team behind us of about eight or nine of us. And we've been focused on expanding out. So our goals for 2021 was build out a proof of concept product, which is what we did with the food delivery segment, and then expand out to hundreds to thousands of other occupations around professional indemnity and public liability insurance. We will be looking at a personal accident insurance product as well in the future. And I may even actually speak to you in the future, Gillian, because I'd love to kind of understand how we could even offer a streamlined service around workers' insurance, because that's also quite complicated. But yeah, fundamentally what we do is we offer and tailor insurance solutions from any kind of insurance provider. We currently have one arrangement in place, which will allow us to tackle about 2 million SMEs. So it's a pretty exciting opportunity. And the way we want to focus on building this out is streamlining the experience so people can actually get a quote in a second or instantly. And they can also get their insurance and find the correct insurance within a minute or two, rather than waiting. What some businesses have to do is they wait sometimes weeks and weeks to be able to actually get their insurance in place. They may not even know how or if they're covered. So they're the things that we are tackling and wanting to navigate. We should be launching our new website actually this week and our new platform very soon.
Fantastic. Well, much success for you, Skye, and the team. I look forward to seeing what else comes out from Upcover, and we look forward to following your journey. There is so many shortages in the insurance market, and anybody who's helping and looking out to make things more simplified and cover a lot better, we look forward to your output. So let's see how we go.
Thank you so much, Shalene, and thanks for having me.
Thank you so much.